After selling tens of billions in Bank of America stock, Warren Buffett has gone on a recent holiday shopping spree and has just announced the purchase of 3 different stocks. The American businessman and investor and CEO and chairman of Berkshire Hathaway has had a lot of success, making him one of the best known investors in the entire world. He made some big moves last week, and today we're going to be going over what he bought and what he sold. Because he owns more than 10% of these 3 companies, I'm able to get this information to you in real time versus having to wait 2-3 months way after the fact. So the question is, should these companies be on your shopping list as well? And we'll get right into that. My name is Ace, and you're watching the Ace Hunley channel. Warren Buffett just dropped $560 million on the December market slump, taking advantage of bargain pricing. Leading the shopping spree was a big purchase of $405 million worth of shares of ticker symbol OXY, which stands for Occidental Petroleum. That's 9 million new shares, pushing Berkshire Hathaway's total stake in the company to over 260 million shares, or 28% stake in the company. So why does Warren Buffett own over $12 billion in this company? What is it and what do they do? Well, they're an international company that produces and markets oil and natural gas. So this company is highly leveraged to the price of oil. So it's not a complete surprise to see Oxy sell off when the oil prices sell off as well. OXY, or as what I'm gonna call them, Oxy, is currently trading at $47 a share and is down in the last 12 months by 22% and has a 52-week high of $71. It's paying out a dividend of 1.94%. Despite dropping by 22% in 2024, Buffett's bullish move highlights its operational upgrades, like bumping margins to 57% and maintaining shareholder payout. The stock was up by 4% on Friday and on track to snap a 6-session losing streak, its longest in an entire year. The rally comes after Thursday. The stock hit its lowest price since 2022 amid worries over weakening oil prices. The worry is that tariffs proposed by President-elect Donald Trump may hurt economic growth internationally and right here on U.S. soil, which would in turn weaken demand for crude oil. Also, oil prices could be hit as Trump's pledge to drill, baby, drill could just surge the oil supply. Warren Buffett's spending spree didn't just stop there. He also scooped up 5 million shares of Sirius XM satellite radio, ticker symbol SIRI. He spent $113 million, pushing his stake in Siri to 117 million shares, worth over $2.7 billion, reaching a combined monthly audience of over 150 million listeners. Sirius XM offers a broad range of content for listeners everywhere they tune in, with a diverse mix of live and on-demand programming all across music, talking, even sports. Siri's currently trading at $23 a share. In the last 12 months, the stock is down by 52%, and the 52-week high is $56. This is also a dividend stock, currently paying out over 5% annual yield dividend, which is not too shabby. Sirius XM has been hammered, but owning now 35% stake in the company, Buffett's betting on a huge turnaround after Liberty Media's restructuring just this past fall. He also added 234,000 shares of VeriSign, ticker symbol VRSN. So what does VeriSign even do? It's a global company that primarily operates in domain name registry, managing the authoritative registry for top-level domains like .com and .net, essentially acting as the backbone for internet navigation by providing critical internet infrastructure services like DNS resolution and domain name registration access. So the way to think about this is anytime someone wants to register for a .com address, VeriSign is getting a cut of that. It's a beautiful toll booth business model. I love these reoccurring revenue types of businesses. VeriSign is currently trading at $198 a share. In the last year, the stock is down by 3%, with a 52-week high of $284 a share. Steady performer in Berkshire Hathaway's portfolio since 2013, it's had a quieter year, underperforming the tech sector, but its role as a domain name registry powerhouse keeps it firmly planted in the mix. It is important to note that Warren Buffett's biggest transaction this year, including purchases or sales, was his sale of over $100 billion worth of shares of Apple company. With that sale, they have over $300 billion in cash, ready to go for any opportunities that come by. So just keep that in mind. You, at the end of the day, need to figure out what's right for you. Maybe you just want to follow along with what Warren Buffett does. You see he buys OXY and you go out and buy OXY as well. Maybe that works out for you. If you foresee inflation and maybe let's say the years ahead, then that play would actually probably work out for you. For long-term investors, this is classic Warren Buffett, zigging when everyone else is zagging. Warren Buffett's latest moves is a masterclass in finding dips in the market at bargain prices, doubling down on sectors with long-term potential. As always, Warren Buffett's playbook is clear. When the market starts to panic, look for opportunities. And this past week, he showed us exactly how it's done. If you like videos like this, go ahead and like and subscribe so you can continue to see more content just like it. We'll see you on the next video. Happy holidays.